We're so early.
I know, you always tell me. You told me that earlier this year.
Different people understand things differently. So I think Saylor also knows we're early, but I believe he understands it's ending soon. That's why he is buying. He's like, I'll buy the tops.
We were talking about $1 million Omega candles.
It's all happening. It's just a matter of time. I think there are a number of things happening. Maybe it's the shakeout recently. We dropped 20K, that largest flush ever of liquidations, and all we did was drop 20. There's no barrier now because the portal is wide open now, and there's no limit to the throughput of that portal. It's impossible that Michael Saylor gets 10% of the supply. At these levels, 38 trillion is a crazy big number. They realize the solution is Bitcoin.
Samson Mow opens with a big picture look at Bitcoin at a moment of growing uncertainty. Institutions are entering through ETFs. Corporate treasuries are accumulating, and yet many investors still debate whether we're early or already late. Logically, Bitcoin looks inevitable, but emotionally, market volatility tells a different story. He highlights two key signals shaping the market. First is the largest liquidation event in crypto history, which wiped out leverage and crushed altcoins, while Bitcoin remained surprisingly resilient. Second is the widespread mispricing across altcoins and digital asset treasuries, reinforcing just how early Bitcoin still is. Against this backdrop, Samson explains why he believes Omega candles, massive, rapid upside moves, aren't a thing of the past, but simply delayed as structural shifts like ETFs quietly absorb demand. Before we continue, please like the video, subscribe, and turn on notifications so you don't miss future updates. Share your thoughts in the comments and explore our other Bitcoin and macro content. Enjoy the video.
We're so early.
I know, you always tell me. You told me that earlier this year, but it's hard. I guess it's hard. It's not hard to believe. Like, the logical part of my brain is saying, yeah, we're super early, and then the emotional side of my brain is saying, no, we're not early.
Well, I see different people understand things differently. So I think Saylor also knows we're early, but I believe he understands it's ending soon. That's why he is buying. He's like, I'll buy the tops.
Yeah.
When he has the capital, he'll deploy it.
Yeah.
It's not about, okay, I'll wait a bit, because he sees that urgency. But another good indicator is, why are we early? Because we have DATs, or digital asset treasury companies, that are buying Ethereum. Like, why would any rational person or investment committee authorize something like that, where you're buying something that has 70% pre-mine, is largely controlled by the guys that launched the ICO, and one of the DATs is owned by one of the guys that launched the token. It's a sign that we are really early.
We were talking about $1 million Omega candles.
It's all happening. It's just a matter of time. I think there are a number of things happening. Maybe it's the shakeout recently. We dropped 20K.
Yeah.
And that's
we got the major candle just in the wrong direction.
But you can see, like, the volatility has declined a lot. Like, I think that was the largest flush ever of liquidations. That largest flush ever of liquidations. And all we did was drop 20. Altcoins dropped to, down to the 90%. Depths of hell.
Yeah.
But, Bitcoin largely unaffected. And it goes to show, like, the resilience is there. It's just there are factors that will push us down or keep us down. You can theorize about many things, but maybe it's not one answer. It's many different things. Maybe there is an exchange selling Bitcoin that they don't have, like FTX did. Maybe it is some paper Bitcoin. Maybe it's whales rotating. Maybe it's people moving into ETFs. I don't know. Maybe there's people taking profits. All of these things can be possible. We don't know. But what we do know is there is a limit. And what we do know is it's impossible that Michael Saylor gets 10% of the supply. At these levels, he's going to get 10%. Like, that's just ridiculous. So the price has to move sooner or later, and I think it's going to be sooner. The other thing probably is, like, alts were running too hot. Ethereum was, like, getting past its all-time highs. Ripple is at like $3.50, which is ridiculous. And I think when alts run too high, there's always a correction. And I've after our Volcano interview, I kind of flipped bearish because the alts were running, and we just know, like, that is unsustainable. And when they go, Bitcoin always will follow down a bit, but then we kind of shake them off and we go back up.
Yeah, and they never recover. right?
Yes.
Do you think the cycles are still intact? Do you think the era of the parabolas are over now that the institutions are here?
I would say everything has changed. And I go back to the ETFs. A large part of maybe that cyclical structure that we've seen is because when there is a large spike in demand and interest in Bitcoin, the exchanges have always been the bottleneck. Like, they would not be able to KYC people fast enough. And that is how you dull the rampant movement upwards, like Omega style candles. But now with the ETFs, that's not an issue. I think as we move to more in-kind issuances, the moves up are going to be more pronounced. And there's no barrier now because the buying is aggregated. It's all aggregation. And that is because of the ETF. So I like to think of the ETFs as a portal for capital to go into Bitcoin. And the portal is wide open now, and there's no limit to the throughput of that portal. All the traditional capital come in. And then look at the Bitcoin treasury companies like Strategy. That's also another big portal too. They can tap into fixed income markets, the bond markets. And again, there is no bottleneck because the buying is aggregated. So I think it's just a matter of time. But I never really believed in the cycles. You can say that there is a cycle because there is the 4-year halving. And you can say there is a cycle because presidential elections are 4 years in the US, and that largely drives a lot of the markets, cyclical nature of the markets. But the fact that we have 3 cycles doesn't mean anything. It's like you flipped a coin 3 times and you got heads 3 times. Does that mean we're going to always have heads? No. So we'll probably see something change now because of all these structural market changes. And I think you're going to see like a super cycle, Omega cycle, something where it's just moving differently and upwards.
Yeah. Does it concern you at all that, there's this centralization of the custody of Bitcoin with these ETFs? Like, I believe 11 out of the 12 ETFs all custody their Bitcoin with Coinbase. I think the only one that doesn't is Fidelity.
Well, the risk is to holders of those assets, to the holders of the ETFs and to Bitcoin treasury companies that are with that large provider. Because it's true, like if you're big and you have most of the Bitcoin, there is some risk that something could happen. But the risk is not to people that use Bitcoin in the better way. I wouldn't say the right way. The better way is self-custody. Having Bitcoin in your own hardware wallet, in your software wallet, just having your own Bitcoin. There is no risk to us if we have our own Bitcoin. The risk is to people that farm out the responsibility for the Bitcoin to another entity. Yeah. Trusted third parties are security holes.
Absolutely. Do you ever see a world where these, BlackRock is custodying their own Bitcoin?
I think you will see that because there is just such a level of risk. And I think that risk is largely created because the approvers, the SEC, they want to see something done in a way that is established and methodological. So they want to see that you have a good custodian, and then everyone is filing because quote unquote Coinbase is a good custodian and they're going with the gold standard. But now that they're approved, I think they can move if they choose to, or build their own custody solutions, which I think they will start to do because you'll have an upfront investment of a certain amount of money, but then you won't be paying Coinbase forever.
Yeah. Does it also concern you too, Samson, with the introduction of the ETFs and also the popularity of the ETFs? What we've seen is less people are actually taking custody of their coins.
I think it's a natural progression. It's really sort of like the survival of the fittest. The fittest will custody their own coins. Okay. Everyone else will, rely on a third party. And that's normal. It's sort of like gold, right? Yeah. The origin of gold is you have your own gold. And because of convenience, you give it to someone else. Yeah. And I think there are things that wallet developers like ourselves and others can do that make it far easier. Better ways of recovery of seed phrases, better backups, more robust backups. But by and large, there is a barrier to self-custody. And I think it's difficult to overcome because people are so accustomed to having their money in the bank and accustomed to looking at an app or a web page and seeing a number and thinking, oh, that's my number. And they just don't know or care enough to do something about that. And some people think it's a barrier, like it's a big learning curve to have a seed phrase. But as NVK says, if you can drive a car, you can back up 12 words. But it's just a mental block that I think stops people from doing it.
Yeah, of course. So Samson, with this new administration, you had a lot of talk. In fact, I think it was even promised about a strategic Bitcoin reserve. Here we are, I think 10 months later. Shout out to Senator Lummis. I think she's done an incredible job, and all the representatives and congressmen and women senators that have really pushed that initiative forward. Bo Hines, as well, that now is with Tether, but it seems like things stalled out a little bit. I don't know if you have more information regarding that. And is it even a good idea for countries to have a strategic Bitcoin reserve from the perspective of individuals?
Well, it's a double-edged sword. So the US has an SPR now, and they added to it from seizure.
Yeah.
And I think
they did. It was like a lot of Bitcoin.
$14 billion dollars of Bitcoin. And that could be a dangerous thing. Like if you cannot pass legislation like Cynthia Lummis's Bitcoin Act to accumulate in a non-budget neutral way.
Well, technically it was a non-budget.
Yeah. But
right?
Seizures are non-budget neutral. Seizures are budget neutral, right? They didn't spend money on that.
Yeah.
And if they can only accumulate through seizures, then the motivation is to accumulate by seizing people's Bitcoin, which is not ideal. But I think Bitcoin is less prone to seizure than, say, gold or anything physical. But of course, we have big pots of Bitcoin with the custodians. But I think the goal should be that they accumulate through the Bitcoin Act in a non-budget neutral manner. And I think the slowdown really is just it takes time, and the government shutdown as well, probably. But I think it will move forward because it's a necessity. If you look at the overall landscape, like why is the US so bullish on Bitcoin and unfortunately crypto and digital assets? I think it's a necessity. They need it because no one is buying treasuries anymore. The world is moving away from the dollar or trying to move away from the dollar, BRICS countries especially, and there just are no more buyers. And the traditional buyers are also having economic woes back home. Right. So they need to have stablecoin issuers like Tether, that I think Tether is the 18th largest buyer if they were a country, to shore up demand. And I think $38 trillion in debt is not something that they can ignore for much longer. So they do need to build a Bitcoin reserve, a sizable one, to mitigate that debt, because people are kind of used to the number now, but 38 trillion is a crazy big number. And you're pretty bankrupt. And, who wants to own more of your debt? I don't think it's possible to keep continuing it on that track. But also, this compounding of the interest is going to be ridiculous too. So something has to be done. And I think they realize the solution is Bitcoin.
A key takeaway from Samson Mow's discussion is that Bitcoin is breaking away from the old cycle narrative. While past moves were driven by halvings and speculation, he argues that ETFs, Bitcoin treasury companies, and aggregated institutional demand are reshaping how price discovery works. He reviews common explanations for recent volatility, whales, paper Bitcoin, ETF flows, and profit-taking, but says none fully explain price suppression. The real constraint is supply. At current levels, it's mathematically impossible for large players to accumulate meaningful Bitcoin without price moving, which is why Samson believes Omega candles are delayed, not gone. Despite heavy liquidations and a sharp market flush, Samson remains bullish. Bitcoin absorbed the largest liquidation event in history, while altcoins collapsed, reinforcing its resilience and suggesting the market may still be early in a much larger structural shift. If you're enjoying the analysis, don't forget to like the video, subscribe, and hit the notification bell.